Okay, I'm gonna make this one real short, real short. Okay, there, brother Will and KW. Basically, I've been doing all kinds of. Yesterday, I did a lot of trades yesterday after the session, but they were just cleaning up and getting out of trades. Basically, taking profits. Um, okay, markets. Look at there. Markets are just basically flat, going nowhere. SPX is flat. The cost of fear, flat. Cost of money, bonds, basically flat. And what else do we have today? And let's go to Bitcoin. See what the cost of Bitcoin is. Okay, Bitcoin, it's bouncing. So, it's a nice healthy bounce on Bitcoin. Interesting. Let's take a look at the chart. So we got, oh, wait a minute. That's financials, my bad. Here we go. Now, there we go. There's a chart of Bitcoin. Nice little bounce. Made double top there at 100,000. And then kind of come down a bit. Interesting. Anyways, basically you have flat markets today. Let's look at our inventory. What did I do yesterday? Okay, I took GDX off because we had 3 rolls already in GDX, and I was already up about 27%. So I figured after 3 rolls and 27%, get out of the trade. ARK Invest is now a free trade. We moved that strike, and now there's no risk in the trade. EEM, we took that off. That was the one that I took off. That was over 100%. And so that trade is done. And that was it. Let me see. Yeah, that was it for yesterday. So ARK Invest is a free trade. We're still getting hurt a little bit on X. X is still, that's been back and forth. Our deltas and X, I'm not really freaked out on, because even though the deltas are scary. They're getting back and forth between 13, 15, but look at where this at in our mountain. We're still, it's just that we've done so many rolls on this. We've done so many rolls. Even though our deltas, we're short deltas. I'm not going to go ahead and get totally paranoid in that. So I'm just going to sit on my hands on that one. Just, again, sit on our hands. So ARK Invest, Intel. Yeah, Intel, did we roll that? Yeah, no rolls. Okay. Intel's deltas are cool. Okay. The weed stocks, those were just basically, lotto tickets. TLT, that's the free trade. TLT is a free trade. Basically, there's no risk in TLT. VIX, that was the Trump trade. That's a dead trade. I'm just gonna let that do what it does. I don't expect VIX to be falling anytime soon. But ARK Invest, just to show you what a free trade looks like, there's no risk. We took all the risk off the table in that. So ARK Invest, there's nothing that, we just sit on our hands. So, basically, it's the cost of the trade. Yeah. It just once, after a while, if it sits too long and you've already got that, if you could take risk off the table, take the risk. Even though it was a lotto ticket trade, take the risk. Now it's just pretty much just like TLT, a lotto ticket. You can't lose on that. Okay? There's no risk in the trade. That and TLT, you cannot lose. We made that a free trade. Anyways, let's look at some new trades. We'll look and see if we can find some new ones to get into today. And we'll just let me do something here. Yeah, Hotep there, brother Will. Yeah. Yeah, I like those free trades. Butterflies, broken wing butterflies and stuff like that are the funnest ones to adjust, because even though that, basically what you did is you set up a target point to see if that thing could get there, and you set it up to where you're getting credit. And of course there's going to be more risk, but the thing is if you could take the risk off the table, especially when there's like 30 days left somewhere, or anywhere from 40 days and left, you might as well just take it off the table, because the more and more you get toward where options expiration is, the more and more, because of gamma, you have a greater chance of that thing moving against you. And if you already got the profit, you might as well take it and run. Okay, look at Macy's. 66. What happened with Macy's? We'll see if Macy's, there shouldn't be any earnings on anybody right now. There's no dividends. That's not till December. There's a lot of stuff that went ex-dividend today. Macy's not one of them. Just wondering why Macy's implied volatilities are up so high. Let's take a look at the stock, see if it crashed. Well, I mean, it's, look at that implied volatility in there. Goodness gracious. Wonder what happened. Is there some news about it? So, okay, shorter holiday season. Okay. Investigation of Macy's on the behalf of investors. Okay, that's probably what it was. Wow. Interesting. On the behalf of investors. So Macy's might be in some trouble there. Interesting. I'm just looking at that volatility. Let's see what would happen if there's a strangle that we could, again, everything I start is with strangles. Then I go, I love that double butterfly concept. I won't do it on stocks, but on indexes, I love it. I really, really love that concept. I could do it on ETF indexes, but I'm just like, Well, let's see what's going on with Macy's real quick. I'm kind of down a little bit today because I worked out like a dog yesterday. Man, I didn't know the workout that I did yesterday. Right now, I'm just the pain that I'm going through. I mean, I'm suffering this morning. That's why my throat is kind of messed up. I went, Brother Will, when I started the workout, I started out with burpees, then I did deadlifts. I'm trying to get my deadlifts up because that's, again, deadlifts and kettlebells, for strength, farmer boy strength. When you get that farm boy strength, so that's, you could fight, you get a lot, between that and the endurance, you're fighting as much, you have a better chance when you get into a scuffle, because that farm boy strength, again, it's just for like fight training. But I started out with a bunch of burpees because I'm trying to get my endurance up, and I'll do a set of burpees, then I'll do deadlifts, then burpees, then deadlifts, then burpees, then deadlifts, because that took a lot out of me. I actually added 2 more plates into my deadlifts. So, I mean, it's really, really, I'm really, really starting to make progress there. Then after I did that, then I did my dips, weighted dips, because I always use plates when I do weighted dips. Anything that I do now is pretty much weighted, unless I'm going for like endurance. But I did what's called the W set. And there's this the dude from Belarus, the dude is jacked from here to next week, but he's like Bully Juice. They do a lot of strength training. And this dude, he's military, Belarus military, and a firefighter or something like that. Dude is like, he's brutal in terms of his workouts. And so I did Wild Moose's W workout, where you do 3. He does it without weights, without being weighted, but he'll do like 5 pull-ups, 4, 3, 2, 1, then 2, 3, 4, 5, then 4, 3, 2, 1. It's almost like a W. And so I did that weighted with weighted plates, but I can only do 3. So I do 3, 2, 1, 2, 3, 2, 1, 2, 3 with weighted pull-ups with the plates, with the weighted dips. And then I went after that and I did my weighted pull-up set. And I did the same thing with weighted pull-ups. and I don't do 5, 4, 3, 2, 1 through 3, 4, 5. No, I did on pull-ups. I did 5, 4, 3, 2, 1, 2, 3, 4, 5, 4, 3, 4, 5. And I mean, my back is just on fire today, just from the pull-up set. And in between that, I'll do Russian pull-ups and squats, and just do that. And then I end everything with doing face pulls and rear delt exercises. Man, oh man, my entire body is just like, I mean, like I said, that's why my throat is kind of, I mean, I didn't know how much of a workout I did. I was tossing and turning from the pain. I mean, just the stiffness. And, my shoulder's still hurting me from like I threw my shoulder out about a year, not even a year ago. Earlier this year, I think it was like in February, March. I'm always throwing my shoulder out in February and March, just because, I was clowning around on my muscle ups. I was clowning around because some young brothers were there, and I was like, you know what? I'm gonna do some high pull-ups and do some clapping pull-ups. So you pull up as hard as you can and you clap. And I did that, and I caught because I can't see it, so I caught the bar because I couldn't see the bar, but I caught the bar and it just yanked my shoulder, and it's been in pain this entire year. Yeah. So, because these young brothers were there working out, so I figured I'm gonna show off, and they were freaked out. They were like, man, OG's doing it, because I do clapping pull-ups. You pull as high as you can and clap, because that's one of my major things right now is, real serious bodyweight strength. But anyways, so now, yeah, that's why I'm a little out of it. I'm feeling like Macy's. So let's take a look at the deltas. Let's go to 15 deltas on Macy's. Basically, it's fight training. That's all it is. It's just fight training, because a lot of calisthenics guys are doing a lot of MMA right now, and I really dig that. A lot of them are really getting to fighting. So we're getting 51 cents out of 223. That is not the trade I want. You're not getting paid enough for this. Although you are getting something, but look at the granularity of the strikes. I mean, I like that because they're dollar strikes in case I have to move this. Problem is I'm not getting paid for it. Yeah, I mean, you could go to the 23 delta, but you're already short 8 deltas. If this is closer to you're short right here, and there's no volume. Remember, volume is king. There's no volume on this. So, but I was just kind of curious what's going on with that. Remember, volume is king, volatility is queen. Prince is expected move, and the princess of trading is all of the above. She looks at everybody. As long as you got that down, you're okay. So I'm just looking at, man, I am not seeing, look at all this implied volatility change on this. We have high IV rank, but a lot of these implied volatilities are coming out of these trades. The fact that they're coming out is not giving you a lot of opportunities. Okay, you know what? Oh, inventory. Let's see what the trades. The UNG never got filled. I forgot to look at the inventory of the trades that never got filled. See if there's still a fighting chance to fill those trades. Okay. UNG was the only one that we had that never really got filled. I remember FCX. I wonder what FCX looks like. We tried that, but that never got filled. Yeah, see, that pisses me off. We could have filled it. I had a 143 out there, and I think it was like around 130 something, but it's already scooped out. You would have made like about 33% had we gotten that filled last week. You'd be up more than 33% now. You'd be up almost 50%, but it never got filled. We tried to get it filled last week. Market never came and helped us. Could have made it 50% in a week. Man, I hate when that happens. I mean, I love it because our analysis is right, but we just never got the trade. Had a 50% from last week almost. Anyways, I'm looking at IV ranks. The only one I can look at, UNG was the one. Oh yeah, let's take a look and see where UNG is. It's the one we tried to get filled yesterday, and that never got filled. UNG. Okay. We tried to get 23 cents credit, so it moved too much on us. Now we're only getting like 5 cents of credit, but I think I think it went from 23 to like 7 cents. So that was just UNG was just moving yesterday too much. It's down 6% today, anyways. Let's go back to the watch list, see if there's some new trades. I'm so glad I got out of that SCMI. SMCI, man, oh man, that was a painful trade. GM, look at GM. What's going on with GM? I have to hand it to Bat over there at Tasty Works, because he had done a GM trade the other day. I think it was just a regular condor or a strangle. I think it was a strangle. Take a look at the strangle. See, again, the granularity of strikes is good. That means I can move them. It's just not enough strikes to move. So if I did this, I definitely have to straddle it. Okay, 18 deltas, 19 deltas. Not enough volume though. Okay, again, 138 at a 557, you're not getting paid enough for it. 50, 62.5. Let's go to 67.5. That would be $5 if we were to do $5 condors, because of the fact, where the strikes are at. You're only getting 92 of 408. You're not getting enough credit for it. I want more credit. Although you got a 50% chance of making 84%, 66% chance of making at least a penny or more. You're delta neutral. You get paid $1.56 in this a day. It's just getting 90 cents on $4 is just not enough credit. Let's just take a look and see how much this thing can move. It can move about $2.30 a day easily, like it's nothing. Remember, double the ATR. Knowing that that's the case, let's take a look at the mountain and see what we have in terms of the curve of the mountain. Yeah, it's just way too, yeah. If it ran up there tomorrow, you'd be down 67, 79. If it just ran down to the downside tomorrow, you'd be down 62. And then if you had to move these strikes, you would be 143 or 607. It's not worth it. If you had to move this strike, it would be 147, same thing. You'd be bringing more buying power, but you're not getting paid. If again, every trade I get into, the first thing I know is I'm going to have to adjust it. Never get into a trade without knowing that you're going to have to move things around. Boeing, look at that. Volatility got scooped out of Boeing. And I kind of wanted that trade, but this volatility got scooped out. Let's see, anybody else? Nah. GDX, we got out of that yesterday. GDXJ, volatility is going up today. We could look at GDXJ or GDX. No, look at that. GDX volatility got scooped out. GDXJ, it's barely into, look at not enough contracts. Even though, it's pretty liquid stock. But the options volume is not high today. Let's see, Las Vegas Sand. No, let's see, anybody else? See, Freeport McMoran, that's depressing. 40%, 43% in 1 week. Damn near going on 50 in 1 week, man. That was a great trade. We just never got filled in that. I like it when it's like that. But we know that at least our analysis is cool. Walmart, what's going on with Walmart? Nope, look at that. It's just barely, there's no, you're not getting paid. So for selling premium, I'm not seeing a lot of trades premium selling. In terms of, let's look at the ETFs, see if there's anything. Anything in ETFs other than GDXJ, I'm not really seeing much. Nope. And ETFs, not really seeing. I like to see the green. The 5-day change has to be green for me. Because you're getting paid. We could do like EEM and probably calendarize stuff depending on where it's gone. So let's take a look at GDXJ and then we'll look at stuff premium to buy. If there's any premium we can buy. Like EEM and the one we got FXI, I think or XLF is another one we bought premium on. Let me see. GDXJ going out to January, that gives us 51 days. Let's go down to the 17 deltas. We'll go 18 deltas here. Wait, there's no volume. Never mind. There's no volume on this. 112 out of 44. Well, with no volume, there's not much you could do anyways. Let's see if there's anything in February. Chances, if there's not in January, you're not going to really find it in February. Yeah. There's no volume here. No, nothing. Okay, so there's no trades there. So let's see if we could buy premium. And where can we buy it? SPX, anything like that, I'm sure we could buy it. SPX, any of this, the SPYs we could buy. These are liquid ETFs. Let's go to liquid symbols. Okay, liquid symbols. Or better yet, high options volume. So I want high options volume. Okay, there we go. IV rank. We'll go from low to high instead of high to low. Look at Lyft, man. Wow, volatility is getting sucked out of all of these. When volatility gets sucked out this quick, chances are it's going to continue. So be very careful of trying to buy premium and stuff where volatility is just getting sucked out like crazy. I usually like it if it's like -1 or -3 or -4 in the last 5 days, but minus 2 and 3%, you might want to wait before you buy premium because like chances are you can wait like a day or two. Look at Lyft. What is going on with Lyft? Yeah. I mean, these are looking. I mean, you might end up with a good situation buying premium, which means that more than likely a market will fall. Look at that. See, it's still trending down. Yeah. I mean, in other words, you're trying to pick the top and pick the bottom. Even though we're looking at just income, I don't care about which direction. When volatility gets higher in equities, it usually means that the market is falling. Look at Meta, Facebook, Lyft, Facebook. I mean, these are some doable trades in terms of buying volatility. But one that I want to see is spiders. We'll go to ETFs first because I'd rather do that in ETFs than stocks. So let's go to ETFs, liquid ETFs. See if there's any volatility to buy. Of course there is. XOP, again, IV ranks, anything under the 30s. SPS, and the spiders, that you can't go wrong with that because that's been, basically, through the roof, which means, when you're buying volatility, you're looking for, again, it's a counter trend trade because you're saying that this has a potential to fall or at least pull back. And SPX, it has potential to pull back. I mean, it's just been really like going back and forth for the last few days. And I think the volume has been lower anyways, pulling back on volume that's been sucked out. That usually tells you that this market wants to come back, which means volatility is more than likely going to escalate on this. And then all the stocks will actually, basically all stocks follow SPX or SPY. So, I mean, this is great for calendarizing. If you see every time it had an up move, notice how the up moves are getting smaller and smaller as it goes up. That means this thing is trying to turn around. It's trying its best to turn around. I'm not saying it's going to, but it's definitely trying. If we look at volume, and let's go to bring in some volume. Let's look at, let's see. It's regular volume. Okay, I don't want indicators. They would be a chart thing and not an indicator thing. I think it'd be what would be on the chart itself. Here we go. Let's see if we can put volume on this chart. Chart. Okay, show low high. Okay. No, we don't care about hiding drawings. I just want to see volume on the chart. Come on, Tastyworks. Where's my eyesight? Okay, can't see it. Themes, events. Oh yeah, we do want events. Oh yeah, I do have events because I wanted to. I didn't have it last time. Shortcut sessions. We don't care about that. Layout. Okay. I should be able to see volume on this, and I don't know where they have that. Just simple volume. Okay. I wonder if let's see. Indicators, drawings, and we don't want to hide that. We don't want to remove those. Maybe it is an indicator. I just wanted to see regular volume. Oh, there we go. Subgraph. There it is. Volume. The main graph. I want it on the main graph, not the subgraph. I want it on the main graph. There we go. Okay. Oops, wait a minute. There we go. Okay. If we're looking at this, as the markets were going up on this last highs, notice how volume has been peaked out of this. The last spike of volume you had was literally this little up move, this last up move going up this last week and a half. But notice how volume is not really like going up as volume. So it means that people want to leave this party. They're just trying to leave the party of going. Not saying that it's going to crash. I'm just saying that on each successive up move, they're getting smaller and smaller. Each of these up moves are smaller, and this is like the last vestige of an up move. Remember, it just spiked up like crazy. So, I mean, no, this is the one before. This is the last vestige of the up move. Not to say that it can't go any further. This thing could go through the roof. We're already at the 6,000 mark, which is a big number. And, your speculation, i.e. Bitcoin, is at a big number. So why not take profits? So I'm looking at the possibility, especially in the next, probably next month. You have what? I think you have an interest rate decision. Let me see what you got in news today. Because remember, Jerome Powell is not necessarily looking, and Brother Forecast, always good to see you. Jerome Powell is not necessarily looking to go ahead and support Donald Trump. Okay? He doesn't care anymore. So chances are that, and they already got a new Treasury Secretary, which means Janet Yellen is out of there. So, a lot of folks, this is like lame duck stuff. So lame duck stuff, folks are more than inclined to not really, they're not there to support the so-called administration that's coming in. So they're going to let things they're just working long enough to go ahead and keep things going until they get out of there. That's all this is. So if they're doing that, especially with Donald Trump's tariffs, I mean, can you imagine what's going to happen with the tariffs, with their tariffs? I mean, that's insanity. But hey, Trump, it's a negotiating thing for him to play hardball with this tariff talk. Thing is countries around the world have to adjust their portfolios for the madness. And even though, I mean, it's funny, Lauren Boebert, that idiot from Colorado, the little MAGA queen, the one, her, and I think the other one that likes to, Kristi Noem, the one that likes to kill dogs, said that no, Trumps won't have anything. She said, we know more than economists do. Maybe, because economists, you get 3 of them in a room and you get 5 different opinions. But the thing is they have no clue about tariffs. The only reason why Lauren Boebert and Kristi Noem are saying what they're doing is because Donald Trump had sex with him. He had an affair with both of them. So of course they're going to back him. And he did, by the way. Did a lot of folks, and Marjorie Taylor Greene back in Donald Trump, man, he went through them like crazy. So they have a personal interest into it. Hold on for one sec, Brother Will. So yeah, so they have a vested interest. But when Kristi Noem says, we know more than economists do, tariffs don't hurt anyone, that should tell you enough that this is going to be an extremely interesting 4 years in terms of their next economy, in terms of United States. For anybody that felt a little dismal about how this election result came out, let me tell you something. There's a silver lining to it. You might have been vindicated, okay? Because chances are these clowns that are trying to come in on this next administration are going to run the entire global economics through the floor. If they're already talking this nonsense now, and even if they don't do anything, every nation has to adjust its portfolios for supply chains, investment strategies, relationships with other nations. That's why you see France and all these other nations start to look at it and say, we don't know about this Ukraine thing. I mean, they're doubling down because they want to see Donald Trump fail. But the thing is, they're trying to use that as leverage to stop him from doing tariffs. From just going. I mean, because that's the thing is the Lauren Boeberts and these idiots, MAGA idiots, don't know what a Smoot-Hawley Act did the first time. Smoot-Hawley Act, they don't know what a Great Depression is. They don't know that. So they're talking their book because, of course, Donald Trump had sex with him. So they think that, oh, yeah, he's going to save things. Ooh. So all those folks that got a little disjointed and out of sorts because of that election result, you may be vindicated in ways you can't believe. All I could say is get a lot of water, have at least 2 weeks of cash around you, make sure you have a good gun or two, make sure you have a lot of food, make sure you have some matches, some batteries, make sure that you have a medical kit and a form of communication like a ham radio, because you may need it. You may need it here in the near future. Like you couldn't believe. You may need it. Make sure you have a full tank of gas at all times, because these clowns that are coming in, I mean, maybe they'll make miracles work, but you have the most unqualified individuals talking some stupid shit, and other countries are looking at this going, "Oh, hell no!" They're like, "Nah, it's not just Canada and Mexico; it's everybody, Germany, you name it." Okay, so you had preliminary GDP. So GDP basically is the same. Unemployment claims are damn near the same. Core durable goods, they went down a little bit, little deflationary. They were, it's definitely been trending down. And durable goods is how I used to get free washers and dryers. If you have any kind of insurance or home warranty or anything like that, when durable goods go down, if you have something that's old that you want to get replaced, that's the best time to get it replaced, and that way you'll get it free. Because a lot of these insurances and the home warranty scams won't do it nowadays. But what I did to get more stuff that even though if I didn't need it, is I waited till durable goods orders came out and that they trended down. Because keep in mind, this is a lame duck financial institution, so they won't do it. You usually do it when the administration's in the peak of its administration, especially if it's an election year. Because what happens is they want to look good. And so Fed and Treasury, when those durable goods go down, they're trying to make those things go, at least range or go back up. And they'll make it kind of look like, look how bad it is. Well, what happens is durable goods orders, you could find a lot cheaper appliances when durable goods goes down. Or if you have a warranty or insurance of those appliances and you want to get something replaced that you've had for like 10 years, wait till durable goods goes down, because they're more prone to like replacing them free, or you're getting like 20-30% discount on appliances. I've done this over the years. That's what I've been doing, and saying, hey, if I want a new appliance or I want something and I either want it free or like a major discount, I'll just wait till the durable goods orders go down in the mid-open administration. Because what that means is they're going to try to push that stuff out the door at a cheaper price. Like if you need a new microwave or something like that, they're going to try to push it out at a cheaper price because they need to make those durable goods orders go up. And so, but I always wait. It's really a political thing. I like to wait and see how bad it is in an administration. And if it's really contentious, then that's the best time to do it. Because, there's all kinds of little tricks that I used to do. You know, like if you see nowadays, you know, when they're selling like Girl Scout cookies or if you see the little kids out there selling candy bars, I usually wait because, and especially at a store, you could find where you could get really good deals on meat and really good deals, even though inflation's been tearing things up. I'll wait. And because the thing is whenever you have those folks selling the stuff out like Girl Scout cookies and little candy bars and stuff like that, that's kind of telling you where inflation's going to go. Okay. And if the prices are going up there, that's usually when I wait. I wait before I'm buying like beef or something or eggs or something like that. So I look at because that's kind of like the intro at the door to tell me, okay, inflation's going to be like this week in front of this store, and therefore I know what I'm spending. There's a lot of little tricks that I used to do back in the day. Like I told you about Christmas. If you want to know how bad, not just inflation, but where credit card rates are going, Christmas, I always go and this is the best time to do it, especially because election year and you got inflation. Is I'll go and I look at what everybody's throwing out in Christmas, and I walk through the alleys of good neighborhoods or rich or wealthy neighborhoods and impoverished. I walk through the alleys, and I might do that this year again, and I'll see what everybody threw out in their garbages, because that'll tell me where credit card rates are going to go the next year. And because if I see a lot of big ticket items, chances are you're going to have a year where rates, but now because of inflation, that genie's out the bottle, so things can change a little bit. So we'll see if there's a lot of big ticket items. Chances are that rates will probably either level out or go down a little bit. You know, but you have a political situation with Jerome Powell, and I don't think he's into the mood of cutting because he's out of there in 2 years, and in other words, out of spite, but a little more insidious spite, because you know he's getting rid of Janet Yellen. She's out this year. So the Jerome Powell and Janet Yellen, they're buddies. They've been working together forever. So seeing this new administration come in, I think that they're going to spite Donald Trump. So chances are you won't see a lot of folks buying a lot of big ticket items, you know, on a credit card or you know, on credit, for lack of a better term, this year. So and I'm not going to say it's going to happen, but I'm pretty sure you're not going to see that. So if I walk up and down I won't see a lot of like widescreen TVs and, you know, iPad and iPhone boxes or, you know, stuff that folks buy, you know, and put on credit. You know, chances are you won't see that walking up and down. And I didn't see that this year. I walked up and down. I did not see a lot of that in the trash, you know, after Christmas. I was walking and I didn't see a lot of garbages that had, you know, big ticket items, you know, that you would more than likely put on a credit card. So chances are that was kind of a precursor to rates going up this year. There's a lot of little tricks that I do to see where economies are going. I told folks this years ago, Brother Will, just little ways of like seeing where the meat is and if there's a lot of beef and the beef and the pork is not being sold, mainly beef and lamb, that means there's an inflation problem, because that means the cost, you know, they're not pushing it out fast enough. People can't afford, they're eating a lot of chicken and fish and maybe some pork, but they're eating a lot of chicken and fish. Which, you know, and so chances are, you know, I mean, you might be able to get a better deal because they need to sell that stuff. That stuff needs to come down. Otherwise, you're going to get what's called spoilageflation. And that's what's been happening this year. You had shrinkflation, inflation, spoilageflation. You had all these different things because the prices were too high. And they needed to push that stuff out the shelves because that stuff does not stay there, you know, that. And then you saw expiration dates. Like it was like 7 days, and it was like the goodbye. Well, they were kicking those out to like 11 days. And I saw that on meat products where they were kicking it out a few days, you know, with the expiration on beef and stuff like that. And I was like, oh man, this stuff is not leaving the shelf like they wanted. So, and there was not a lot of lamb this year, you know, because I love lamb. And there was not a lot of lamb on those shelves. I could not find lamb shanks, where the year before I was braising lamb shanks left and right because it's expensive. You know, it's too expensive. So there's a lot of different little tricks that you can do to go ahead and see where things are going. Anyways, durable goods came in. I could say that I would look, if you see two durable goods numbers and it's trending down, this is the perfect time to start looking at appliances. You got Christmas time. The only problem is you still are in an inflated environment, number one. Number two, Jerome Powell is going to start doing things out of spite. It is what it is. I ain't mad at him. Hey, do your thing. Preliminary GDP. Trade, okay, it went up a little bit. Price index GDP, it went up, especially in time of Christmas. So that's something else. Core price index, okay, it's about the same. Pending home sales went down a little bit. I'm not going to really freak on that. Okay, you still got crude coming in. Crude inventories coming in later today. So, anyways, it's basically flat to, basically, I'd say a basically flat situation in terms of GDP. KW, always good to see you. Yeah, KW said no ribeyes or T-bone steaks, and I love ribeyes. I could cook a mean ribeye for myself. Uh, um, but yeah, I mean, it's just that I see a lot of ribeyes and T-bones, but they're not really good. There's not a lot of marbleization. They say that these things are choice, but they're choice, but they look select. Okay, I mean, a lot of the ribeyes, even at major shopping centers, with the exception of one, they do have some marbling, but it's not like what you would get out of it's not Wagyu, of course, but even of a choice, there, like even if you go to Walmart, I don't go to Walmart, I don't shop there anymore, or you go to Costco, you could get some choice that looks okay, but it really is okay, taste wise and everything else more than likely going to be okay. They do have the Wagyus and whatnot, but the thing is they're labeling cuts of meat that are not as good as they say they are. Again, inflation. It's like they're labeling things that you would like 2 years ago. You could get whatever it was more like it was. If it was, the marbling of choice and whatnot, especially on meats like, even chuck steak or chuck eye, not chuck steak, chuck eye or rib eye or flat meat or stuff like that. You were able to say, okay, yeah, all right. But nowadays, what they did is they took cuts that were not, they were just on the border of choice going to a select, or if you wanted prime, it was just on the border of prime going to choice, and then they'll go ahead and mark that up as a better cut of meat. It really isn't. Again, that's what inflation did. Inflation, I mean, I saw spoilage inflation, especially with asparagus, because I do like a lot of al dente asparagus. And what if you notice the asparagus is a lot smaller and it's spoiled, the flowers of the asparagus spoil a lot quicker, a lot quicker. And it's really depressing. I mean, it used to last a few days. Now it only lasts a day. So I have to cook my asparagus like instantly. Same with broccoli. The florets of the flowering of the broccoli has a lot quick spoilage. And a lot of that is due to the fact that they're putting it out and trying to keep it on the shelf a little longer. Spoilage inflation is a big thing. You're seeing a lot of products like that. But these are just little kickers of how I look at economies and where economies may go. A lot of little tricks, like if you want to go ahead and, know where, again, the three sisters of inflation, soybean, silver, and sugar. And I saw those earlier this year, and I kind of said, okay, there's going to be a major problem. And the best time to check those are anywhere that's not around. I mean, you could check it, but it's kind of skewed a little bit. But if it's like Mother's Day, Halloween, Easter, Christmas, and Thanksgiving, it's kind of skewed because those are the times when sugar consumption is and Valentine's sugar consumption is at the greatest. But keep in mind, sugar is not just for consumption. They also use it for fuel. They use it for a lot of things. And so the thing is, those are little ways of seeing where markets are going to go or where inflation is going to go. So you know what to buy, when to buy it. But you could check it. And the times that aren't Mother's Day, Easter, Halloween, Christmas, Valentine's, or Thanksgiving, and check it, and I'm not talking on those days. Check it when it's going to those days, like the month before it goes to there. And or I mean, those were when they check it anywhere within a month before those happen, you're going to start seeing more than likely. Chances are, I mean, I've just noticed this over the years of supermarkets pulling those prices up, and I'm like, oh, okay, the cost is going up. It might not be going up on the commodity side, but just to know where I'm buying things, I'll notice, because I like to make sweet potato casseroles, and that takes a lot of sugar. I like to make teriyaki sauce and stuff like that. So I like to have a good store of sugar. And now, because of this year, inflation was all over the place. Everything went up regardless because of Joe Biden and his foolishness, his vaccine mandates. And I mean, Joe Biden is the worst. So the thing is because of that, everything just went up irrespective. But when things are a little bit more quote unquote normal, um, without Joe Biden and Kamala Harris's vaccine, foolishness, that debacle, when things are kind of quote unquote normal, I like to gauge my buying to see, okay, is it around this time a month before where I notice prices are more than likely going to skyrocket? Because, sugar consumption is through the roof at those times. So chances are, so I like to kind of gauge where things are being bought. I've done that over the years there, KW. But anyways, so we've had, basically markets are flat. Buying premium on the spiders is what buying premium on anything that is of lower volatility is what I'm looking at today. I'm looking at anything that I could buy premium on short term. I would look at doing something today. Then let's see what SPX, even though VIX is, it's basically flat. I may even wait until I see this market go up a little bit today. But if I did this, it'd be like double calendar. Double calendar. I like the double butterfly concept, but volatility is not high enough for me to do the double. Where is the VIX at? I think it was at 14. Where was VIX at? VIX, 14. That's very low on VIX to try to sell volatility. That's too low. So if I did that on on spiders, I would be buying volatility. I normally like to do this on indexes, but again, doing it on an index is 10 times more than doing it. So it would probably be there's a lot of strikes. Of course, the liquidity is through the roof on SPY. It's 500 stocks. Anyways, it would probably be like another 9-day, 13-day type of trade. If we go out to the, again, we're not going to 16 deltas. We're more likely going to go around the expected move. Where's this thing expected? They're expected this thing between now and December 6th. They expect this thing to at least go $7 one way or the other. That would put us at the 25 delta, which is around a 50% chance that this thing will get touched. So to go in, I would be doing it, say, 54% chance that this thing, or 56% chance that this market is going to hit that. I like that. And if I doubled it up in the calendar, so that would be 56. Okay, so that's 594 at a 28 deltas. 26 deltas is the upside. So if we look at it as a strangle, 85% chance, 58% pop. So we did this. Okay, that's 594, 606, 594, 606. That's 9-day, 13, 594, 606. I want at least 3 days, but it's only 594, 606. We'll buy these. 594, 606. Let's see what we got as a double cow. 168. Do I think you're getting paid $4 a day on this? 168. This thing has definitely got a chance of hitting it. Because we want this thing to move. We do want it to move. We don't want it to move too much. We would love for it to stay in between these. In between that, but we do want the volatility to come up. And usually when volatility goes up, that means this thing is moving, which means chances are it'll move to our short strike. And I'm looking at more of a downside than an upside, that it could get down here. So if this thing moved to the downside, let's go to analyze. And we have enough, let's analyze this. So if this thing were to move, probability, and say for instance, let's go, because we only want to be in this, it's December 6th. We only want to be in this, let's see, how many days would that be? because we don't want to be in more than 50% of the days that we're in. So December 6th would be out. Gosh, probably in about, let's say, at the very most 4 days. So let's see if it's worth doing. What would happen in 4 days? 1, 2, 3, 4. Okay, you can make. It's not a lot. It's not a lot. It's like maybe 20%. Not even 20%. About 15% in 4 days. You can pull 15% in 4 days. Should this market just stay between it and do nothing? Now, say for instance, because of the fact that, again, we're using per implied volatility contract. So if in 4 days the front month goes down quite a bit and the back just kind of stays, if it goes down 1 or 2%, okay, if it goes down 1 or 2%, then you're talking. Okay, then you're talking about a good, you're talking about a really good trade here. If volatility goes down on both of them, again, you're only looking like maybe 20%. But if volatility on the back month goes up, the volatility on the front month goes down, then it's Money Monday. Then it's a trade worth doing. But if volatility stays the same on the back month, which more than likely would happen, the front month goes down 1%. Hey, I'm not mad at this trade whatsoever. Okay, it's a great trade. Okay, it is one worth doing. And that's because we're only staying in for 4 days. We stay in for 5 days. Of course, profit goes to the roof. Or no, 7 days. We've stayed in for 7 days, but I don't like staying in too much. If the price fell, okay, and the price fell by $1. Let's see. No, let's make it. This thing again. Wait a minute. Let's reset this. Between now and 4 days, between now and let's say the 3rd, they're looking at a $4 move. So if this thing did move $4 down, 9, okay, to the 595, and if this thing fell, all things being equal, if this thing fell and volatility stayed the same, theoretically you'd be down about a little less than about 10%, which is nothing. I mean, it's coffee money because this is a coffee money trade. You'd be down less than 10%. But usually when markets fall, volatility goes up. So if it goes up, then of course, let's see, volatility goes up on the front month, and it will more than likely go up on the back month. Then, basically you're flat. You got a flat trade. Because volatility will go up on the front, on the back month. And if volatility went down, which more than likely would happen on the front month, then chances are, and the back month stayed the same, you'd be doing good. And that's today. Now let's go 4 days out. Let's go to the 3rd, 5 days out. It would be a great trade. It'd still be a great trade. If that market fell, volatility on the front month, even if all volatility stayed the same, all volatility stayed the same, you'd still be okay. You'd be doing 20%. But if volatility went down on the front month, it'd be an incredible trade. If it even went up in the back month, you'd make about 100%. So, that's in the theoretical. It's nothing's guaranteed. I'm just saying theoretically. Theoretically, I kind of like this. So I'm gonna keep this in the wheelhouse. The thing is, do I really want to spend $168 or $1.68 or $1.50 to do that kind of trade? Do you really want to spend that? It's speculative, but still yet it's an income trade because, all you care about is getting money in. It's like going to work. That's all this trade is, just clocking into the 9 to 5. So I'll keep this on the, and what I did is I just went out to where more than likely, again, they said that this market between now and December 6th, that this thing, they expect this thing to go at least to go $7 in either direction, which is your expected move. They also said, and and what I did is I came up on the deltas a little bit because again, we're only staying in this trade for for the expected move of $4 either way or $5 either way. You're not going to stay in the entire time. You want to be out of this. You want to just take this trade and get out in like 5 days. Again, it's about income. It's not about trying to be right. So on the deltas, now we're looking at a 58% chance that market will get there that it'll get to the December 6th, which means this thing, they're saying this thing can move. This thing can definitely move. The good thing is you're not staying in. I mean, it's a cardinal rule not to stay in too long. Okay. The thing is you're looking between now and when you want to get out of the trade, you're looking at this thing moving about $4.50. So if it moves $4.50 either way, you're still within that margin of like, you're still within that expected move. It's not like the world is going to end on you. And usually when it does that, if it moves down, volatility goes up. This is a volatility play. You're buying volatility. So you're buying cheap volatility in hopes that it will go up. So if I did this trade, I'll probably back it down to 165 because, and see if I could get in at the low part of it. And which means this thing is moving. I like that. Maybe 164 if I want to tie up 164 to do this trade. But anyways, yeah, give me some ideas, some ideas in terms of, right now I'm looking at buying volatility and not selling it. So anyways, yeah, just giving you a heads up. Anyways, Hotep, take care.